cedi has depreciated against the US dollar, the British pound sterling, the euro and other foreign currencies since its redenomination in 2007, with the rate of depreciation increasing from mid-2013 through to the first quarter of 2014. Considered West Africa's worst performing currency, the Ghana cedi has been projected to depreciate by about 5% in 2014. An economist, Janae, diagnoses the problem.
Principal reason why the cedi has been depreciating is that we need more foreign currencies for our imports of goods and services, for capital payments outside, than we earn from our exports, remittances, and capital inflow. And as long as demand exceeds supply, we're going to have pressure on the cedi, and it's likely to lose value against the dollar.
Ghana is experiencing uncertainties and lack of investments due to the value of the cedi and scarring inflation. Unfortunately, this situation is breeding grounds for speculations as both consumers and investors' confidence is fast eroding. People, traders, and investors prefer holding their assets in denominated currencies in the detriment of Ghana's local currency, the cedi. As economist Kwame Aggie recently stated, currently the demand for the foreign currency exceeds the supply, hence the depreciation of the cedi.
The Ghana cedi in the fourth quarter of 2014 started seeing some steadiness on the interbank market against its major trading currencies, that is the euro, the pound, as well as the US dollar. Now, we've had predictions from analysts that this trend might continue, but rather at a slow pace. Meanwhile, reports shows predictions of the cedi dropping as low as 4 cedis 20 pesos to the dollar by year-end 2015.
The cedi seems to be coming under pressure a few days into 2015. This has sent Ghana's local currency, the cedi, downward marginally. As of December 2014, one needed 3 cedis, 19 pesos just to get $1 from the interbank market.
The dollar has been appreciating against all other currencies. So you got to realize that in the world right now, the US is showing growth, the EU zone is under real pressure. China's growth has slowed. Japan is just about entering another recessionary period.
From January until mid-2015, the cedi has sent a 0.34% marginal depreciation to the dollar. The Forex Bureau are also showing signs of the cedi to the dollar of 3 cedis and 40 pesos, as well as other trading currencies. Several banking research institutions continue to predict a further fall of the cedi back in 2015, as high as 4 cedis, 20 pesos to the dollar, despite the ease and pressure.
The sense we get is that there's going to be that this slow, steady depreciation will continue for some time because it's external to us. It's the price of oil, the improvement in the economy of the US. But the warning is this: if anything else were to go wrong, the IMF deal not signed or delayed, or in any of the other parameters, then we should expect a sharper drop in the value of the cedi.
By this, analysts are calling on governments to be proactive and adopt new measures to halt the cedi's free fall.
We recently rolled out new regulations with foreign exchange in order to better regulate the foreign exchange market to reduce the pressure on our currency, the cedi. But on the macro front, we've been doing a lot of reforms. One, in terms of public finance management. We're putting in a new public finance management platform that makes us better able to monitor the state of the budget and make sure that we have more discipline in the budget.
The U.S. interest rate increase has previously caused significant global financial market volatility. Majority of the world's currencies, like the Ghanaian cedi, have been experiencing a considerable amount of volatility and depreciation. Currency depreciation usually has a significant impoverishing effect on the economy. Hence, situations like this, Ghana should treat its allying economy with the uttermost sense of urgency.
But the US dollar continued to outstrip inflows, including central bank supplies. To get more on this development, we're joined from London by David Cohen. He's an Africa economist at Citi. David, it's great to have you on the show today. Well, first of all, I'm sure many Ghanaians are not very happy with this development. I think with the advent of oil production in Ghana, there was a sense that we're going to get into greater times, better times. And then what we're seeing now is that the Ghanaian cedi is down 4%. It's depreciated 4% against the dollar this year, making it one of the worst performing currencies in the world today. Take us through your thoughts on the issues here. So many people I've spoken to are pointing to the trade deficit, which is about $2.6 billion. David, can you hear me?
No, Wally, I can't quite hear you at the moment.
Okay, let me
faded away. But what I think you were asking me is about the worst performing currency, the cedi.
Yes, I wanted you to
Yes, okay, I can hear you better now. Look.
Okay, go ahead.
I think in response to the first point you raised, right, I think it was quite interesting. What you said was that there's many Ghanaians who won't be happy about the Ghanaian cedi weakening. Well, that's kind of true and kind of not true in a way, if you think about it, right? The way to think about the Ghanaian cedi is this is a tightly controlled market of which you have three main inflows onto it. Cocoa earnings, gold earnings, and then more recently, as you talked about, oil. And many people believe that oil would be the panacea and drive a period of cedi stability.
Right.
But you also have to think of it from the other way. A stable currency is of no particular benefit to cocoa producers, and we're in the middle of the cocoa harvest at the moment. The reality is that cocoa farmers are turning up at the cocoa board, delivering their crops at the moment. The world price is falling quite sharply for cocoa, and what they're going to end up being paid would be significantly lower without this depreciation of the cedi. Now, if we know that the central bank controls it, we probably can't distinguish the fact that they are aware of this, especially in an election year, 2012, December, the government will go to the polls. So I think we should be careful saying that not everyone benefits from a devaluation. Many Ghanaians, and particularly crucial cocoa farmers, do benefit from a devaluation. Right. Of course, urban populations who look out and see the dollar rate more tend to see it as a sign of economic crisis, perhaps a bit.
As well as the IUF bailout prospect, some analysts project the period being uncertain to clearly predict the cedi's strengthening.
The Bank of Ghana has relaxed some of the rules it introduced in February this year to save the cedi from falling further against major foreign currencies, especially the dollar. So what prompted the central bank to relax its forex measures, which have been in place since February?
We had planned and we were implementing it when the Senchi Accord came. So it is not a pressure on us. When you introduce something, you have to go back to the market to assess how it is impacting the market.
Ghana analysts also spoke out against the non-payment of government loans and the transactions of local business in dollars. For small-scale businesses, this downward slide directly affects their operation.
In Ghana, the central bank has taken preemptive action. It raised its own benchmark interest rate by 1% this week. Their concern is that if the interest rates over in the US rise, then investors who previously had their money in developing currencies, especially in investments here in the Ghanaian cedi, that those investors will put their money back into dollar assets. That would devalue the Ghanaian currency against the dollar, making imports even more expensive, pushing up prices for consumers here. The preemptive action by the Ghanaian central bank hopes to somewhat taper the impact of an interest rate rise in the US, quelling any possible inflation that may occur as a result of the local currency going down any further than it already has over the past year. Katerina Vitozzi, CCTV.
Throughout our documentary, we have demonstrated different factors affecting Ghana's currency, the cedi, and falling. As a recommendation, Ghana first has to float its own currency through its economy. A stable and strong currency means a nation can import items cheaper than it would if its currency was weak. In order to stabilize the cedi, there are 6 key factors that influence its performance: inflation, interest rate, current account balance, balance of trade, public debt, and market speculation. Under the right regimens, the US dollar would no longer put negative pressure on the cedi.